Welcome to today's What Moved the Market show. I'm your host Prem. It's Monday, January 12th, 2026, and here is everything you need to know as the markets close for today. Indian equity markets ended Monday on a positive note, snapping a 5-day losing streak that had weighed heavily on investor sentiment over the past week. The Nifty 50 closed at 25,790, up 107 points, or 0.42%. The Sensex gained 302 points to settle at 83,878, up 0.36%. BankNifty added 199 points to close at 59,450, gaining 0.34%. The rupee steadied as the session progressed, trading around 90.19 per dollar, showing strength as investors took renewed confidence in the India-US trade narrative. This recovery came after a particularly harsh week, where both indices had fallen sharply due to global trade tensions and persistent foreign fund outflows that had pressured markets significantly. Metal and mining stocks led the charge today. Coal India was the standout performer, rallying 3.39% as energy demand themes regained traction. Tata Steel surged 2.75%, while JSW Steel climbed 2.26%, and Hindalco added 2.21%, riding a broader rally in commodities. Asian Paints also caught strong buying interest, gaining 2.5% on improved consumer sentiment. The losses were concentrated in technology and financial stocks. Infosys declined over 1%, marking the biggest drop among Nifty constituents, while Bajaj Finance fell 1% and Eicher Motors slipped 0.85%. This sectoral split reflected profit-taking in defensive plays that had held up better during the week's sell-off, combined with optimism returning to cyclical and infrastructure-linked sectors. The Nifty Metal Index surged nearly 2% today, easily the strongest performer among sectoral indices, driven by renewed global demand expectations and geopolitical premium in commodities like gold and silver. PSU Bank Index added 0.7%, with banks benefiting from the broader market recovery and improved sentiment. FMCG gained 0.6%, supported by the outperformance of names like Trent and Asian Paints. On the flip side, capital goods, pharma, media and realty indices shed between 0.5 and 1.5% each as some sectors consolidated after recent moves. Broader indices extended weakness, with the Nifty Midcap falling 0.05% and the Nifty Small Cap retreating 0.7%, suggesting that while the recovery held at the headline level, it remained selective and lacked conviction in smaller names. The real turning point for markets came from an unexpected geopolitical catalyst. Newly appointed US Ambassador Sergio Gor addressed the media and made a critical announcement about trade negotiations. He stated that both the United States and India remain actively engaged on the long-delayed trade agreement, and that the next round of discussions is scheduled for Tuesday, January 13th. He emphasized Washington's determination to finalize the deal, despite the complexity of negotiations with the world's largest nation. This comment about continued momentum in trade talks provided just the confidence boost markets needed after weeks of uncertainty. Gor also announced that India would be invited to join the Pax Silica initiative as a full member next month, a significant strategic partnership focused on semiconductor and critical minerals supply chains. These remarks essentially signal that despite recent tariff tensions globally, the US-India relationship remains a priority, which lifted sentiment substantially in the second half of the session. Regarding commodities, precious metals saw significant strength today. Gold futures on MCX's February contract hit a high of 1,41,388 rupees per 10 grams, representing a gain of nearly 1.73% and testing new record levels. The underlying factors were geopolitical tensions and safe haven demand amid global uncertainty. Silver futures also rallied sharply, climbing 4.75% to reach 2,71,887 rupees per kilogram, showing even more exuberance than gold. The spot rates in major cities like Delhi and Mumbai reflected similar strength. Crude oil prices remained relatively modest today, closing around 5,362 rupees per barrel, up just 0.26%, as global sentiment remained cautious, despite energy supply concerns related to geopolitical developments. From a technical perspective on Nifty 50, the recovery today was quite dramatic. The index hit an intraday low of 25,473 early in the session, before staging a V-shaped recovery. This low coincided with a crucial support zone around the 100-day exponential moving average, which held firm. Resistance today formed around the 25,800 to 25,870 zone. For BankNifty, a similar pattern emerged with strong support emerging near 59,000 as buyers stepped in aggressively. The index formed what technical analysts describe as a bullish hammer pattern, indicating rejection of lower levels and potential short covering. Immediate resistance on BankNifty sits at 59,600, followed by 59,900. Looking ahead to tomorrow's session, the critical question for traders is whether today's recovery is the start of a sustained uptrend or merely a relief rally within the broader downtrend. The Nifty must convincingly reclaim and hold the 26,000 zone, which coincides with the 20-day exponential moving average, for momentum to turn structurally positive. Until that happens, every rally into resistance should be treated with caution. Support levels to watch remain at 25,700 and 25,500. For BankNifty, the same applies, with resistance critical at 59,600 to 59,900 and support at 59,000 to 58,800. Momentum indicators remain weak overall, with relative strength indices approaching oversold territory but not yet showing sustained bullish divergence. Your actionable takeaway for tomorrow: as a trader, focus on the reaction at the 26,000 resistance on Nifty. If the index breaks above 26,000 decisively, it could open the path toward 26,200 to 26,300. Conversely, if sellers step in again at these levels, watch for a breakdown below 25,500, which could invite fresh selling toward 25,300. Given that US-India trade talks resume tomorrow, any headlines from those discussions will be critical for near-term direction. Make sure you position defensively until that resolution becomes clearer. Stay tuned for tomorrow morning's wrap and send in your questions. Thanks for listening to What Moved the Market with Prem.